Straight to all the action on the Lal Street in what was another good day for the bulls. Surbhi Bhatia is standing by with the detailed analysis. Surbhi, another day of green on the screens today.
Well, folks, I coincidentally got the color right today. So green it is on me and on the screen right behind me. A pretty good session today. And why I say good? Because the gains were intact right from the morning. And towards the end, there was no volatility. There was no sign of real profit taking. And on the board, you've got an 87-point nice notch up on the Nifty. And the Sensex up almost 300 points as well. Now let's start talking about the contours of today's rally. Really, where did it all come from? Pretty widespread and well spread out. So in terms of sectors, let's take a look. The Bank Nifty was up in about 1.5% and no problems here as well. Very steady. You had the auto index in top gear. I'll come back to auto stocks in just a moment. The metal index rallied a lot when news came in on the possibility of at least that half deal between the US and China. So that really led to a big rally in the last half hour on metals. The mid-cap index actually underperformed today. It was a large-cap oriented day. It was really large-cap stocks that were doing much better. Now I'm going to come back to the revved-up auto stocks. Now, the sense on the street is that the festive cheer, at least for the time being, is going to result in good numbers for the month of October, which is why there's a lot of buying. It's anyone's guess if this is just a trading pop or whether this is a real long-term bottom that's being formed. But Eicher, M&M, Maruti, Hero Moto, Bajaj Auto, almost all auto stocks were in fine fettle today, in good shape and form today. So this was a positive. The other interesting stocks worth noting would be HUL for sure for me, because the market chose to look at the positive numbers and not the more subdued management commentary. Numbers, as we know, the margin was above expectations. The volume growth was above expectations. That stock did really well today. In fact, consumer was a good sector once again. Look at Britannia, ITC. A lot of these names had a good session. And HDFC Bank was playing its part for the bulls as well. A nice 1.5% uptick on that stock as well. Now coming back to metals, as I was saying, that was a real global theme that was playing out. Very sharp up move on these stocks. In fact, the intraday graphs were spiking higher. Then there was some profit taking as well because it was more a trading pop than anything else. But in general, lots of green on many of the material stocks and metal stocks through the course of the session as well. Let me talk about some mid-caps. It was not really an all-out mid-cap rally sort of a day because the index was up only 0.25%. But as always, you'll have some movers and shakers. These were the stocks that stood out. Bandhan Bank gets included in the MSCI indices, so there's going to be a lot of the automatic ETF inflow which will start coming in, and that was showing up today itself. 10%, big move on Bandhan Bank. The Adani stocks are still in focus after the Total deal. So 6% to 5.5% on enterprises and transmission, and Strides and Prestige were some of the other noticeable gainers. Last but not the least, I was talking about this stock yesterday as well. Remember, Indiabulls Housing Finance was down 5% yesterday, another 5% down today, because we know that SEBI has not approved the buyback, at least not right now. So more pressure coming in over there. But otherwise, a pretty good day for the bulls. I'll tell you what, the Nifty is now at the highest level since the 1st of October. The next few sessions become very interesting because we need to see if these higher lows the Nifty is making, whether they can translate into a resumption of the real bull rally.
Okay, Surbhi, thanks for joining in with that. Green indeed across the screens. But let's talk about the big earnings that came in a short while ago. IT major Wipro announced its second quarter numbers a short while ago. It was largely in line with what the street was expecting. So constant currency growth was slightly below expectations. But if you look at the margins clearly beat expectations. The company has in fact raised its growth guidance for this December quarter, pushing the upper end closer to 3%. Rima Tendulkar is here with a snapshot of the numbers. Rima.
Largely in line with estimates, while the Q3 guidance is better than what the street was anticipating. So on Q2, revenue growth slightly lower than expectations, while margins were a beat. So on the top line, the company's delivered a dollar revenue growth of 0.5% versus estimates of 0.9%. Constant currency revenue growth of 1.1% within the company's guided band, but we were expecting growth to be closer to this 1.3% mark. And bear in mind, growth once again will be lower than what peers TCS as well as Infosys have reported. Margins have beat expectations, so at 18.1%, it's a decline of 40 basis points sequentially, but we were expecting margins to come in at 17.5% on account of wage hikes. So the company seems to have delivered well on the margins. What the street will like is the Q3 guidance at 0.8 to 2.8%. This is higher than the guidance of 0 to 2% we were anticipating. And a quick word on verticals. BFSI was subdued. There was weakness in communication as well as healthcare, but the consumer business and manufacturing seems to have driven growth for them this time.
All right, Rima, thanks for that. But let's get to the big headline from the divestment space. Sources tell us that the world's largest energy player, Saudi Aramco, may be looking to buy a government stake in Bharat Petroleum. Let's go across to Anshu Sharma for more details. Anshu, what are your sources telling you here?
That's right. We understand from sources that Saudi Aramco might be looking at strategic disinvestment, which is being offered by the government of India in BPCL, where government wants to give management control and 100% of its stake in the company. The government has already put out a tender for legal advisor as well as asset valuer for the same. We understand that Saudi Aramco is likely to put in a expression in this bid as Prime Minister Narendra Modi is slated to visit Saudi Arabia at the end of this month sometime. Also note that Total in an interview to CNBC-TV18 yesterday said that it will not look at bidding for BPCL as it is looking to expand its fuel retail business in India and is not interested in refineries. Meanwhile, BP said that it's a big news out of India, but it'll have to weigh in as to what India has to offer on strategic disinvestment. Apart from that, Keen India has said that it won't comment on BPCL's strategic disinvestment, but it will look at the pros and cons of the offer for BPCL. Back to you.
All right, Anshu, thanks for joining in with that. In fact, we have more from the energy space. Even though demand for crude oil remains under pressure across the world, the demand in India is robust. That's the word coming in from OPEC Secretary General Mohammad Sanusi Barkindo. In an exclusive interview with my colleague Manisha Gupta, OPEC Secretary General also spoke of balancing demand and supply in times of a slowdown. Here is a slice of that interview.
The demand numbers are continuing to come under pressure globally, being driven largely by the revisions we see in the global economic outlook, also being affected by the long shadows casted on the economy by the trade disputes between the United States and China. But be that as it may, the Indian market remains robust. Demand remains very robust here in India, and due largely to the economic and fiscal policies that Prime Minister Modi has embarked upon. And we urge other countries to follow suit.
There have been various investments by the producing countries, by various bigger companies as well into India. How have you looked at the Indian demand growth going forward? Because there have been various reports saying that as of now, India's dependence on imports perhaps is 83 to 85%, which will only go up to 90 to 92% going forward, perhaps in next 10 years or so. Is that what you also are looking at? And also, with the kind of investments coming here, do you see that trend continuing?
The forward integration into the downstream sector of the Indian market by some of our member countries is very healthy. It's healthy not only for the Indian markets, but also for the producing countries, our member countries that are investing here.
So with the kind of market that we are in right now, with a minimal global spare capacity, how are you looking at the demand-supply match going forward? What numbers would you put forth on that?
The act of balancing supply and demand is a continuous process. I would reiterate, today we have a mechanism that has been tested and proven, and we intend to continue to apply these mechanisms. And the Indian authorities, of which we are in dialogue with, and the industry are fully conversant of this mechanism and are fully supportive.
All right, time for a very short break. On the other side, Reserve Bank employees push for steps to avoid recurrence of incidents like the PMC Bank scam. Details on the other side.